Mr. Afolabi Olowokere there at the Securities and Exchange Commission. Well, the first half of 2018 was characterized by late passage of the 2018 budget and, of course, the reluctance by the president to sign or to assent to that bill. But the period saw 5 to 6 months of disinflation, twice maintenance of stay of action on monetary policies, more liquidity strain and sell-offs in the fixed income market, as well as sideways trading at the equity market. But of course, we had some other economic developments that unfolded within those periods. Now let's join the head of investments at Quadras Capital, Bolahon Aino, for a look back at this period and possibly to get some kind of forward guidance on the second half, the next half, which is the second half of 2018. Good evening again. Thanks for joining us on Capital Market.
Thanks a lot, Temple.
So this period, the first 6 months of this year, yes, budgets played a key role, disinflation played a key role, and generally, how would you say all of these economic, macroeconomic variables and other economic activities, affected or impacted the markets?
Thanks a lot, Temple. So really, the year began on a bullish note. If you recall, January was quite bullish because we saw a bit of slowdown in February. For this year, at least, we're quite optimistic. But what we've seen recently is that a lot of FPIs are taking off their funds from emerging markets, and of course, Nigeria is also affected as well. Basically, we've seen dollar strengthening, and of course, we've seen a hike in interest rate. Yeah. So for them, the risk premium on the frontier market or in emerging market is not so much for them. So for instance, if dollar is strengthening and they are investing in Naira, that means there's a currency rate that is in play. So for instance, they're brought in their money in dollar converted to Naira, and of course, dollar is strengthening. That means despite the fact that they might even be recording a gain in their assets, if you convert back, that's a loss. So we've seen a lot of FPIs leaving emerging markets. Also because of trade war between US and China as well, that also caused a lot of FPIs to leave the market. I think another thing that is also causing them to leave is, if you look at Italy as well, there seems to be a lot of drama around Eurozone, whether they're going to leave as well. So all those has really formed the narrative that we've seen in the first half of the year. Despite the fact that macroeconomic variables have been attractive, attractive GDP figures, like you said, there's been disinflation. Yeah. Inflation is currently at 11%, coming from about 15% beginning of the year. So in terms of the economic data, it looks quite attractive. If you look at the PMI figures as well, has stayed above 50 for a long time. So things are looking quite good, but of course there's political risk as well. This is pre-election year, and so we see investors sitting at the fence, and so that's pretty much as well as characterized what we see in the market. Full year numbers were quite attractive, with a quite attractive dividend play as well, but of course investors didn't really look at that. So despite the fact that dividend was attractive, results were attractive, I think the risk factor has been a major concern for FPIs. I know FPIs currently control about 50% of the market.
But you know that toward the end of May and early part of this just ended month, June, it looks like we saw a revamp. We saw, instead of the offshore investors to totally make their exit, it looks like they came back again to the extent that the all-share index of the equity markets now rose back to, gravitated towards 40,000 psychological line.
Yeah, you're right. In the month of June, I think the market gained 1%. Year to date, 0.9%. But of course, that's pretty much very low from where we're coming from beginning of the year. Q2, if you look at the historical trends from 2011 to 2017, it always closed in a positive. 2018 is first time it's closing in negative in about 9 years, loss over 7%. So yes, there might be spikes, there might be small catalysts here and there, but the truth of the matter is that there's global concern, and of course FPIs are shifting to a safer haven, which of course is US securities. Of course, the US also made it known that they expect the dollar to be strong for the remaining part of the year. So there's also like a combined global concession against the US regarding tariffs and all that. So all these have formed the narrative, have formed the investment theme that we've seen.
Okay, so let's look at the implications of the oil price, crude oil price, which rose, and touched $80 a barrel on the 17th of May. That's significant to me anyways. But, was that a misfortune for us? Because since that period, we started seeing a decline in yields at the fixed income market, basically. Was that a misfortune, or how would you want to
No,
assess
it's not a
it?
misfortune. So what we have now, we have healthy reserves. Like you said, crude oil is almost touching $80 per barrel. Began the year at about $66 per barrel. So in terms of accretion to reserve, that's quite positive for us. In terms of budget funding as well, that's even above the budget benchmark. So that's quite positive. Of course, that means when we look at our import cover,
Yeah.
currently quite attractive as well. So in terms of oil, that's always a positive. Oil has always formed the investment theme, how investors appraise Nigeria. So for instance, when oil starts to decline, for instance, you see investors, they're going to flee. So in terms of oil is stable, that's not a misfortune. But I think the major thing is the cost of the developing markets. Like I said, the USD, which is strengthening against emerging market currencies. And of course, that means there's currency risk. So because for investors, for instance, FPI is their investments are in dollars, and that means Naira investments are becoming cheaper for them. Right. They're going to convert back to dollar. It's like you are losing. So that's why, of course, for now, they're going to sit on the sideline.
Forward looking, do you think we will still have offshore investors around? What should the fiscal authorities do to retain them in the second half of 2018?
Well, I think what CBN might do, because coming from last year, a lot of people thought that they were going to reduce MPL. I don't think that's going to happen any moment from now.
Even in the second half of
half of the year, because one, they are trying to ensure that at least pulling FPM, the foreign portfolio investors. Right. So of course, if interest rate is coming down, really is like a disincentive for them. So of course, they might want to maintain MPR at a high level to more or less attract foreign investors. But like the normal cliche, I think people should just look at the value play. Look at dividend-paying stocks, look at investors that have strong fundamentals. Equity market is always a long-term play, and of course, we can't say that too much, so we always reiterate that. If you look at the equity market, last year was 42%. Over a 5-year period, always outperform other asset classes. So in a particular year, might not do too well, but if you have like a long-term horizon, equity always outperform other asset classes.
So with all of what we're saying, the trade wars and all other global events that has been playing out on the developed and advanced and emerging markets, how will that shape things for us in the second half of 2018?
Well, so I think it's going to be a bit of cherry picking. So stocks have fundamentals. So there might still a bit of investors attraction in those stocks. Okay. So the likes of GTB and
basically the stocks with fundamentals and the equity market.
Yeah.
Okay, thank you so much, Bolanho. I believe you're still standing by. You're not going to go away. Yeah. Well, we're back in a minute after this short break.